Yeah, folks, sorry. We hit the delete button or the off button by accident. Let's get back to what we were saying. We were looking at the inflation rate numbers, the hiring, the Labor Department numbers. It's the BLS.government, and you go to data tools, and I don't know, just go to retrieve tools, top picks, something like that, and you can look at. I forget what we were looking at, but what was it? The unemployment rate. I think we were looking at unemployment, and it's level. Here's the rate, and retrieve data. Include a graph, and you can go back quite a while. You go back to the 70s with this. Notice that? Okay, so all of those, again, when it got too low, recession, 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 Great Recession, COVID. So again, when these things got too low, every time something sort of happened, and you could see the numbers here, right? You can look at them. A whole table. We can take these numbers, put them in Excel. We can do all sorts of things with them. Okay. So, but yeah, so you can go look that kind of thing up. Growth and what hiring looks like in the U.S. And yeah, there was a 4-week average for claims, and 2022 had been a strong year for hiring, even though there's increasing interest rates and weakening economic growth. Long-term mortgage rates, which again, of course, are at the highest point since 2008. We have relatively interest rates are higher than they were from a couple years ago, or from more than a couple years ago. So U.S. mortgage rates jumped again this week, their highest level in almost 14 years. Certain to keep even more potential buyers out of a housing market that's cooled considerably since the Federal Reserve began jacking up its benchmark borrowing rate. Mortgage buyers, Freddie Mac reported Thursday, the 30-year rate jumped to 5.89%. The 15-year rate climbed up above 5%, and it says these numbers are the highest that they've been since just after since November of 2008, just after the housing market collapse set off the Great Recession in the beginning of the winter, the late fall, beginning of the winter of 2008. And here's this other stuff. It says that the United Kingdom to cap energy prices. Now, again, these are price controls. That's what this is. That there's the North Sea oil drilling. The Prime Minister of the United Kingdom wants to restart and increase the domestic energy supply. So you're starting to see countries saying, "Look, we're not quite ready for electric cars and all these kind. We're not quite ready for that." So you're getting people to see. You're getting people to start to realize that, or whatever the appropriate term is, but just start to come to terms with we're not there yet. Okay, and also now if you're doing this, and now it's very hard with gasoline. You can have hoarding and things of that nature, but it's very difficult with natural gas or oil, even oil delivered to somebody's home, for a black market to develop in terms of when there's a price cap and there's much more demand at that price than there is supply for a third seller or a third spoke in the wheel to come in and say, "Oh, we'll sell it to you for like a ticket scalper." There's only so many seats at Madison Square Garden or MetLife Stadium. I would say Giant Stadium, for whatever, whatever show, the Frank Sinatra's last show, whatever it might be. And, we'll sell you that $200 seat for $2,000 kind of a thing. You start to see that with price caps, but that's sort of what in the UK. So hopefully the economists out there and the policymakers have thought that out. It says bills have been due to rise to £3,500 a year, which is about $200 a month, 200 pounds a month or so, 200 or 300 pounds a month. So just divide that by 12, just divide the number by 12, and you'll see what that number is. 200 to 300 pounds a month. And I forget what the exchange rate is. What's the pounds to dollar exchange rate? USD to pounds. It's not really 1-to-1, but a dollar buys 0.86 pounds sterling, and if you flip it, a pound sterling costs $1.16. Okay, so it's going to be a little more in dollars, right? It's going to be about 15% more in dollars. Looking at this, so this is 3,000. This might be 4,000 in terms of U.S. dollars. And here's some things to look at. Oh yeah, I put about 200 pounds a month, about 300 pounds a month. It's the beginning of October. Triple the cost from a year ago for the United Kingdom's energy prices, heating costs, and things like that. Now, I don't know. It says domestic energy prices for homes and business. Okay, this is cost of living. This is not gasoline for autos. This is heating your house. And again, just like Maryland, just like Maine and Massachusetts, it's the United Kingdom is about that equatorial level, or that horizontal coordinate on the globe where it has a similar energy pattern. So it's not like Florida. It's not like Cuba or something where it's warm all the time. It's not. There's a cold winter coming, and what are we going to do? And if it's twice as much or 3 times as much, if a year ago it cost us £1,000 for the whole year for our domestic energy costs, now it's £3,000. That's an issue if your income hasn't kept up with that. Taxpayers have to foot the bill, and so the energy companies are seeing a windfall of profits. What does that mean? It says critics say that means taxpayers have to foot the bill. Well, I mean, if they look at it in terms of cost, that's a way to look at it. I don't know if in terms of a policy, how all of a sudden, I don't know if there's another tax on that where the taxpayers, because then if you're increasing taxes to compensate the energy companies for lower energy costs, you're just shifting around with how the money's getting to the energy company. If it's part government subsidy, part the consumer, you might as well just let them see that's where you get into price controls. Like Warren Buffett would say, if you get into price controls, and it's around the same time that we had very high inflation in the 70s, that there were price controls in America. It's not the best maneuver. Housing market cools, cheaper electric vehicles. European Central Bank has the largest ever interest rate hike. Are up 10 times, that kind of a situation. So here, looking at this last one, it says the ECB has made it the largest ever interest rate increase to combat inflation, squeezing consumers and pushing the 19 countries that use the euro currency towards recession. The bank's 25-member governing council raised its key benchmark by an unprecedented 0.75 of a percentage point. The ECB joined the U.S. Federal Bank and other central banks in the global stampede of rate hikes, which is a lot of them, and they're high. Russia's war in Ukraine has fueled inflation in Europe, but Russia sharply reducing supplies of cheap natural gas used to heat homes and generate electricity and operate factories. This has driven up gas prices by 10 times. And here at the end of this is just the Thursday percentage. I didn't get the one for it's Friday today, which is September 9th. I didn't get the Friday percentage change, but those are the Thursday percentage changes. This whole electric vehicle thing, the average price is $65,000, and then whatever you pay, the range per charge. Can you get 250 miles? Can you get 300 miles? You pay a little bit higher for the car that goes further. And I'm not a big electric vehicles guy yet because we're just not there yet. But I'll let you guys read this on your own. The home selling thing, Los Angeles is always a good microcosm of what's going on in the world. Years of soaring home prices and sharper, higher mortgage rates remain hurdles for many would-be home buyers. But with more homes selling for less than the asking price, the housing market is becoming at least less skewed in favor of the sellers. Home buyers are regaining a leverage at the negotiating table as the housing market slows. New data from one of the real estate, and real estate is really a very big indicator of how the that's why the data is hard to get for housing markets, because the data is very predictive of how the stock market's going to do and how the financial markets are going to do. On average, U.S. homes purchased during a 4-week period in August sold for less than the asking price. That hasn't happened since March 2021. Okay, so there you go. All right, so guys, Pete, my classes, Mike, all you folks. So I'll post all this, and I'll email my guys in the Midwest what this is, and also and some of this other stuff here. I'm not going to necessarily do it today, but what causes a recession? What will cause an economic shock? I mean, if we look at this just very quickly, some very basic things. It says National Bureau of Economic Research. What do they call a recession? A recession is significant decline in economic activity in the economy lasting for more than a few months. Visible industrial production declines, employment declines, real income declines, wholesale, retail. So that's a little broader, a little more specific definition. Broader is what we this 2 consecutive quarter GDP. That's unemployment rates rising. Well, we don't have unemployment. Well, actually, we do now. It's starting to catch up. The unemployment did tick up a bit. But we had the GDP for 2 consecutive quarters, and there's no rule that says, okay, well, the first quarter, second quarter GDP increased, and then the second and the third quarter, you had unemployment rates start to catch up and appreciate a little bit. But this is how the NBER defines a recession, right? Decline in economic activity spread across the economy, lasting for more than a few months, visible in the industrial production, employment, real income, and that's what isn't being sort of explained in the media, that kind of thing. The nature and cause of recessions are simultaneously evident and uncertain. Recessions are in essence a cluster of business failures being realized simultaneously. Firms are forced to reallocate resources, scale back production, limit losses, usually lay off employees, and those are clear and visible causes of recession. There's several different ways to explain what causes a general cluster of business failures and why they suddenly realize simultaneously how they can be avoided. I emailed Mike and Pete, I emailed you guys this. I get economic shocks. So the students don't have this, but the general causes of recession and what's going on with this stuff and asset bubbles. But we'll go through this this will be for another video. We'll go through this. Okay. All right, folks. Apologies for having the cutoff with this. We had a little bit of a cutoff with this. So we'll pick this up next time. Apologies for that.